What's up, Tim Sykes here. I hope you had a good weekend. Wanted to make this video just to show you basically what a marathon this truly is. And very proud of Jack Kellogg for so many reasons. He's not only just over $10 million. He also lost about 400,000 the other day, posted about it, fully transparent, pretty amazing. Just a few weeks ago, we were meditating in Utah together. Pretty cool. I'm in Italy right now, and gonna meet up with him in a few weeks. I think in the Bahamas. We're all over the place, but really just proud of him and his progress. This video is all about this article that just went live over the weekend on Business Insider. Click the link below if you want to read it. I think they actually made it premium, so you can, depending on your subscription, I think you can read some of it. I don't know. I'm going to go over all the lessons here because he has made over $8 million in the last 2 years alone. He's over $10 million. It's really amazing. And it's actually funny. The picture that they used was last summer in the place where I'm at right now, which is Positano, Italy. Jack, Matt Monaco, Kyle Williams, Roland, a few other students who have crossed over $1 million were here, celebrating in Italy, finally able to travel. Right now, I'm in Italy. You can see I'm a little more tan. But leave a comment below. Congratulate Jack on his entire journey. And I want to go over the lessons, specifically from, just his journey and what I think that he has learned and what I think you can take away from it. It's really amazing what you can do in this niche if you put your mind to it, if you have the right perspective, if you're really willing to push it, educationally speaking, first. Because this was a webinar that he gave to challenge students just a few weeks ago, and this is, June 30th. I said he might be over 10.4 million in profits right now, but Jack Kellogg, when he was beginning with me in 2017, his first year, he showed his screenshot. Let me just show you this. He likes to keep track of his trading. This was 2017. He lost 2,600 his first year. So I get a lot of messages from people, oh, I don't get it. Trading is hard. I'm 3 months in, 6 months in, 9 months in, 12 months in. You don't have the right perspective. You think that you're going to get it right away. My critics will say, look at this. Tim Sykes charges for teaching and his students are losing. It's a scam. But when you're losing, especially if you listen to me and you start small and you trade small and you learn a lot, all of the early losses help propel you. They help mold you. They help teach you what not to do later on. If you ever want a chance at making $1 million, 2 million, 5 million, 10 million, you're gonna have to learn to lose. You're gonna have to learn how to control those losses. So I know promoters and BS artists always make it seem like everyone's making money all the time. On the contrary, 90% of traders lose. What separates the 90% of traders who lose versus the very few who make millions? I now have nearly 30 millionaire students. I still have to announce some. I'm sorry, I'm so far behind. If you click the link below, not only can you read about Jack Kellogg's journey, but you'll also be able to apply for my challenge. This is where all of my millionaires come from. And it's even in the Business Insider article. They have a separate chat room. They get all my video lessons, all the DVDs, webinars galore, live Q&A webinars, live trading webinars, archive webinars. Jack Kellogg has given several challenge webinars. Kyle Williams has given several challenge webinars. Jack Schwartz has given several challenge webinars. Roland, Mark Crook, Tim Grattani, Michael Good. Tim Grattani has given 70. Watch them all if you're already in my challenge. This is all about learning from the past and being better prepared for the future. I'm in Italy right now. I just posted this this video. I just had this coffee. Check this out. Okay. Oh my God. Wow. Yo, that is amazing. Oh, whoa. This is this place called Gambrinus in Naples. Highly recommend it. They've been in business since 1860, and they're showing me the real way to drink coffee, because that cup is actually heated, so it keeps heating up the beans, and then they put this over the on the rim of the cup so that your lips don't burn because the cup is so hot. Check this out.
Beautiful. Whoa, look at this.
And so he's mixing this special cream, and I literally can't tell you how good this is. I'm just getting into coffee in the past few years, but this is next level. The reason why I bring this up is because Gambrinus has been doing this since 1860. They know their coffee, okay? They have built on the process, gotten better all the time. Jack Kellogg, if you look at his process, not trading since 1860, not 1960, not even 1990 or 2000 or 2005 or 2010. He started in 2017, 5 years. Leave a comment, congratulate Jack, but also let me know, will you be dedicated to study for 5 years? I know people want all the money right away, but that's not realistic, especially in this market. We've had a little bit of a bounce, but it really is a marathon, not a sprint. And you can see 2017, 2018, 2019, he wasn't doing much, but he was learning. This is what trading is all about. You learn, ideally with a small account, you learn your process, you figure out what you're best at, and you get better over time. And then you push it and you try to maximize it later when you're ready. I have a chart. Hold on, let me pull up this chart. I tweeted this just a few days ago, and it's just a basic chart. You have to survive in the beginning. Notice it's red because surviving means losses, failure, lessons, in order to really succeed. I have a lot of my top students going parabolic like this. My haters and doubters don't understand it. They're like, all these charts look similar. It must be fake. These are paid actors. And they use that voice too. None of my top students are paid actors. I don't use any paid actors. I don't pay anybody, okay? They pay me. And guess what? Because this is specifically what it takes to succeed. You survive in the beginning, you learn small, you trade small, and then you succeed when you have refined your process and you can scale up. So it's all about understanding this as a journey as a whole. I mean, if you go back and you look at this article with Tim Grittani, 1,500 into $1 million in 3 years. He made nothing his first 9 months. Nothing. Zero. If Jack loses 2,000 plus his first year, Tim Grittani makes nothing. Most of my top students have the exact same kind of journey. So everybody always wants fast money. They want to trade big right away. On the contrary, be patient. Focus on your education. Click the link below. Join my challenge. Click the link below to read this article. I'm going to go over the lessons of this article. Enough preaching. But I do have to get this out of the way because so many people have the wrong perspective. If you lose, you have a few losses, you get discouraged. You're like, I suck at this. You don't suck at it. Everybody sucks in the beginning. That's part of the process. Watch The Matrix. Neo fails in the beginning and then he's the one, even though they screwed it up later on. Anyways, this is Jack, in case you don't have a subscription. He started trading stocks when he was 19. He looks for patterns, watches the top movers for days before deciding to take a position. Later in the article, he talks about how he uses stocks to trade. Broke down some of his biggest losses. He thought about becoming a firefighter because it wasn't 9 to 5 and it would allow him to figure out what he wanted to do on his off hours. Like he didn't, go to college, no scholarship, no solid plans. He didn't know what to do, right? He wanted to be financially comfortable. But he didn't have that much money. He saved up $10,000 working a valet job in 2 years. He parked cars. And I should say, even though he saved a lot of money, even though he claims to be a good valet, here in Italy we have a garage. I have video evidence of him scraping the car when I gave him the car, my rental car, to park. So I have huge doubts that he was not a very good valet, or maybe it's just been a few too many years, so he lost his valet skills. But either way, he scraped the crap out of this car, and I'm going to give him crap for that. 9 minutes in, Pascal, put the video of him scraping the car in. I think that would be funny. For all of those who thought that Jack could do it, look at this. We have visual evidence. Let's see. Let's get in his face. Let's be like Joe Rogan to Conor McGregor. What happened? What happened, valet? I left my car in your hands. What is this?
No, it's just comes right off, see?
Oh, look at that.
We'll put this we'll edit this video so that you can understand the full journey. He's not a paid actor. He's just a challenge student. Anyways, he said we lived in somewhat of a nicer town, so everybody around me always had these nicer things. I wasn't able to participate. His mom was a school bus driver. Dad is an electrician. Growing up, he remembered his parents could never really get ahead financially. That's typical of far too many jobs. You're just trying to put food on the table, trying to pay basic bills. You can't really succeed. So that helped push Jack. And, again, I often say, Jack and a lot of my top students and a lot of top athletes, they have a chip on their shoulder. That chip serves them well, and it pushes them. In 2017, he heard about trading stocks from a friend, created a Thinkorswim account, deposited $7,500, began testing the waters, lost a few $100s. He realized he didn't know what he was doing. So he switched off real trading, began paper trading on Thinkorswim and TD Ameritrade. I cannot recommend you enough to trade small or paper trade using stocks to trade. I don't use Thinkorswim or TD Ameritrade anymore. I used both of them in the past. Neither of them lives up to my expectations. While he continued to valet cars, Kellogg would put his earphones on, listen to podcasts, YouTube videos from other successful traders, in particular Chat with Traders, podcasts about successful traders. Highly recommend that podcast. I've been on it twice, I think. It's pretty good. But this is so important. During this time, he invested $7,500 towards an online educational program from Timothy Sykes, a trading teacher, former penny stock trader known for claiming to flip his bar mitzvah cash gift into over $1 million. I don't know why they said former penny stock trader. There are literally people out there who are like, you don't even trade anymore. You just teach. I actually trade and teach, and I've had my 2 best years ever the past 2 years donating it all. I don't know why this is so tough. I talked to the reporter, they didn't include it. He used the remainder of his valet money his parents chipped in so that he could take the course. Understand, this is very rare. Most parents, most friends, significant others, they don't believe in my teachings. They don't believe in penny stocks. They don't believe in trading. With, the stats are on their side, right? Like they understand most traders fail. Most people who teach on the internet are scams. So I don't hold any grudges against people who have doubts. It's good to be skeptical. But again, this is why I'm so proud to be real in an industry full of frauds. I say this all the time. So thank you to Jack's parents for giving him the chance, for chipping in. I know it's a lot of money. We're actually raising the price of the challenge because it's all about specifically finding quality over quantity. If you have any doubts, if you're not going to study hard, if you don't want to invest in your education, you're probably going to be a bad student. Okay? I'm sorry to tell you the truth, but that's the reality. Most people who don't want to invest in their education, they suffer their entire lives. It's ironic because they want a better life. They have the potential to create a better life, but because of their narrow-mindedness, because of them not valuing education, it holds them back their entire life. And some people are just helpless. Some people say, Tim, stop talking about the challenge. Why? This is my passion. This isn't just a job for me. Creating millionaires from scratch is what I do. You think I like trading with a small account? You think I want to trade like a little coward all the time? No. But it's the best way to teach because I think that's how students should trade. Just ask the many short-selling based chat rooms that just blew up on HKD. Jack Kellogg might have lost $400,000 on HKD. Kyle Williams might have lost $100,000, a little over. But Kyle's still up over $680,000 on the year. Jack is still up over $1 million on the year. Even though they've had big losses and HKD was crazy, they still cut their losses. Other chat rooms, non-millionaire creators blew up. They lost all their money. They lost more than all their money. I've heard some horror stories. So if you ever understand why I teach, it's because of this. I want more 6-figure students. I want more 7-figure students. Jack Kellogg, Tim Grittani are 8-figure students. Okay? This is real. But you do have to follow instructions. You can't just make millions overnight like anybody wants or promoters make you think that you can. Anyways, he chipped in, got access to a chat room. Like I said, separate chat room for challenge students. Most people don't know how valuable that is. Where you can communicate with other traders, watch daily video lessons, get market updates with webinars. Today, Kellogg is 24 years old. Tax returns viewed by insiders showed that he reported over $8 million in gains from day trading in 2020 2020 and 2021. His returns gained momentum in 2020 when he had total income of 1.6 million in 2021 that grew to 6.5. So he went from 1.6 in 2020, 2021, 6.5 so far in 2022. Even after the big HKD loss, I think he's at like 1.1, 1.2. He's making 7 figures a year because he studied and he learned the right way. Remember, he lost $2,000 his first year. Can you imagine losing $2,000, paying for the challenge, being like, oh, I'm going to be a millionaire, losing $2,000. So with the challenge course fee and the $2,000, he's down $10,000 in his first year. But he stuck with it because he had the right perspective. And while he was losing the $2,000, he was learning what patterns work best. He was creating Excel spreadsheets. He was treating this, like I always say, like you're a scientist and you're trying to find formulas. There's no one magic formula, but there's lots of little formulas where you find what works best for you. Longs, shorts, near the market open, 15 minutes after the market open, midday, afternoon, morning panic dip buys, breakouts, short selling the first red day, buying the first green day. There's not that many patterns, although it might seem overwhelming in the beginning. It gets easier over time. It's always toughest in the beginning. Anyways, the raging bull market that took over most of the last 2 years made riding the market up and locking in profits easier. This year has definitely been more of a challenge for traders because of both the bearish market. Kellogg learned that the hard way after starting in January with a $100,000 loss the first 2 weeks. Therefore, he set off with a conservative goal rather than trying to make another $6 million. He was aiming for $1 to $2 million. I don't believe in any goals. You'll see me agree with some of this stuff in this article and disagree with it. If you have these goals, I know it's good to, like I say, dream big and study hard, but like if you have specific monetary goals, you start forcing trades. Instead of thinking like yourself as a retired trader, only coming out of retirement when there's a play that fits your patterns, which is usually every day or every few days if you study enough. After the $100,000 loss, he realized he had to size down, limit his risk till he was more confident. His cautionary approach worked, and by February, he was able to recover by trading Tesla, both long and short. I don't recommend trading Tesla either, but again, Jack is now, 5 years experienced, and he sized down. You can size down. You can really just trade with 100 shares if you're not confident, if you're testing. You see that I've been taking a lot of speculative trades with smaller position sizes. Wow, welcome to trading. You don't have to trade with one position size all the time. It's not just Vegas where you double your money or lose all your money. By March, he started gaining momentum thanks to the oil sector. Red hot February. Oil prices skyrocketed after Russia invaded Ukraine. Some oil stocks have reached year-to-date highs by the first week of March. And again, they saw his brokerage statements. Like, we don't just talk about, look, how much money we've made. We show every trade. Business Insider asks for everything. It's actually funny because, sorry, I'm getting like text. I'm multitasking. It's funny because I showed him the article. He didn't even know that it was up. And he's like, I'm so glad it's over. They kept asking a million questions. Fantastic. Okay. This is what should happen all the time. I wish more reporters would interview more successful traders to get the word out about what it actually takes. Jack banked on IMPP, CEI, HUSA. He finished the month off 399,000 in March. So even though he was down in the beginning of the year, if you cut losses quickly, and I know $100,000 in losses sounds like a lot, but you cut losses in the beginning, you get better and you stay within the range of, your new highs. A lot of people make a lot, especially in the past few years, but then they lose a lot. And then it's really tough to get back to new highs after you lose a lot. No different than if you're buying a stock that's 80, 90% off its highs. It's really tough for it to come back because there's so many bag holders along the way that sell into every spike. So if you are doing well and you have a good profit, I can't encourage you enough to take small profits, cut losses quickly, stay near your profit highs, and again, not have any profit goals, but just within shooting range. And then you'll find a little seam here or there, whether you're shorting or going long. You find something that works and you make new highs. It's actually pretty fun. I'm now up over 100,000 on the year. For the first few months, I wasn't doing much. I was just protecting, but I also wasn't losing 20, 30% like the NASDAQ and the S&P were. Although, the NASDAQ has come back 20%, which is impressive. Setting up a winning trade, he looked for patterns, Kellogg mainly trades small and large cap stocks. However, finding a stock that fits a recognizable pattern is more important. I agree with that. He also trades micro cap and small cap. Maybe he trades Tesla every now and then, but he trades mainly small cap and micro cap. This sounds like a dumb statement, but it's actually accurate. When it goes up too much, I want to short. When it goes down too much, I want to go long. It's not that simple, but at the same time, these are the patterns. This is my classic number 7, 7-step framework. When it goes up too much, he's basically talking about a number 3, which will lead to a number 4 crash. When it goes down too much, he wants to go long. He's talking about a number 5 dip buy. He's talking specifically about big percent gainers, not just any stocks. Understand that. But if you follow my 7-step framework, I'll post a link below. I'll post 3 links. 1, a link to this article. 2, a link to my 7-step framework, which you should know by heart. 3, a link to my challenge, which you should apply for if you want this kind of training. He first identifies key tickers by looking for the top percent gainers of the day. He uses stocks to trade to determine which stocks have the largest upwards. For free tools, he recommends FinViz, which also lists the top daily movers. Then he filters the stocks that have a high trading volume, which is a key factor. I do use FinViz every now and then. Some people say, oh, I need a scanning program. But FinViz is not made for low price stocks. So a lot of the biggest percent gainers don't show up on FinViz. So I want to be very clear. Some people are like, where are you finding these stocks? They're not listed on FinViz. Yes, no crap, because you're using a free tool. You're cheaping out on your education. I can't tell you what a problem it is when people try to cheap out on their education. I get it, okay? I get that a lot of people don't have a lot of money, but you should invest in education and tools that can make you more money. Stop going to clubs. Stop spending money on Netflix. Stop spending money on so much dumb crap where the money can't come back to you. Instead, learn to invest your money into things that can make you more money. This simple rule will change your life. You don't have to be cheap on everything. If you invest in the right things, you grow your knowledge, you eventually grow your brokerage account. It's all about planning for the future. I don't know how to get through to some of you. It pisses me off because some people are like, I want to learn, but I don't want to learn. I don't want to be that obsessive. Why? Be obsessive. Be scary obsessive. Be dedicated. That is what it takes. Jack Kellogg, the article doesn't talk about it, but he actually traded through strep throat and mono. I'm not saying do that. That's dangerous. I was actually trying to get him to go to the hospital during that phase. But that just shows you the kind of dedication. Tim Grittani, same thing. Tim Grittani doesn't trade as much these days because now he's a family man, but he's also made $15 million. So you can be aggressive, you can be dedicated, you can be obsessive, and then pull back when real life, intervenes. Also, he says, I don't want to just see something that's up 300% on like $500,000 traded. I want to see something trading like tens of millions of dollars, even billions of dollars, seeing it up like 50 to 100%. These are the kinds of stocks I trade. I highlighted this paragraph because it's pretty important. Jack now trades with millions of dollars. So he's trading more liquid names because it doesn't make a difference whether he makes plus or minus $1,000, $2,000, $5,000 like my trades. There's different kinds of trading. So I don't personally like those overly liquid names. He needs them because he has a bigger account. I can't encourage you enough to learn how to be a sniper with less liquid stocks. And I'm not saying illiquid. I'm not saying stocks that trade 5,000, 10,000, 50,000 on the day. But I don't like stocks that trade billions of dollars per day. There's too many traders in it. It's too choppy. I get chopped out because I cut losses so quickly. So be very clear. There's big account strategies and small account strategies. I teach a small account strategy, okay? If you ask me, how do I grow a $10 million account? I don't know. That's not my strategy. My expertise, like Liam Neeson in Taken, is a very specific skill set. People with, let's say, $500 to $500,000. That's my sweet spot. The good news is that's 99.9% of people out there. And some of my, students now have more than 500,000. My strategy still works up to a few million or, even tens of millions. But I don't personally teach that because if you try to partake in that with a small account, you will get destroyed. I love Tim Grittani's trading tickers too. But if you try to employ that strategy with a small account, you'll get wrecked. Be very clear about that. Jack says he learned the hard way that high volume is very important when trading large amounts of shares after he found himself stuck in a position he couldn't exit. So his biggest loss was MMNFF. I traded the same stock with small size with a sniper mentality. I made like 1,500 or 2,000. He got destroyed. He lost 6 figures. He still had the best week of his life that week, but he lost big because he took too big of a position. He said when he felt the price had dropped enough, he took a long position purchasing shares as the stock continued to tumble, assuming there would be a small bounce during which he could sell. He was right about the pattern, but it only bounced back to his average buy price. When he tried to sell, he was left holding the bag. He said, I got into a situation where I had like a 75-cent average with 2.4 million shares. Just to put that in context, that's a nearly $2 million position, which was a ridiculous size position, and it bounced back to my average. But the problem was that there was no liquidity for me to sell into because I had too much size. He was only able to sell a third of his position. By the time he could sell the remainder of his position, the stock was trading around 50 cents. He lost 367,000, which before HKD was his biggest loss. Okay? HKD, same exact thing. He's taking these massive positions. So it's good and bad. He probably has to size down a little bit too. But you only get to 10 million if you're aggressive. So I wouldn't say that it's a mistake. He's learning, his lane. Stay in your lane, right? Like you can be aggressive, not too aggressive. Secondly, he stalked stocks for a few days before deciding whether it could make a trade. Again, this is something I teach all the time, setting up for the perfect pattern with the 7-step framework. I love trading the number 5 pattern. Guess what? Before number 5 comes a 1, 2, 3, 4. You know when it's coming. You don't know exactly, but when a stock spikes 2 days, 3 days, 5 days, 10 days, the more it spikes, the greater the probability that it's going to crash and there's going to be a great dip buy too. So learn the 7-step framework. I can't encourage you enough. He says once he has identified the contenders, he won't take up positions on the first day. Instead, he'll add to them to his watch list, observe them over a few days, specifically looking for a breakout pattern, which is like the number 2 or 3, which is when a stock moves outside its support and resistance. Specifically, he's eyeing stocks for breaking its resistance after trading near its highs for at least a day or 2. I will also say this can work in a faster market if you're looking for a stock breaking the day high intraday too. And let's say you're stalking a stock like the pre-market winners or near the market open. If it has enough volume, especially right now, a lot of recent IPOs are spiking crazy. If it breaks the day high, you can apply it to different time frames. Same idea. Kellogg is mainly taking into consideration what's known as the emotional stages of market cycles, which follows the theory that a stock's price action is based on or influenced by the behavioral pattern of traders. The idea is that when a stock's price begins to move upwards, there's a sense of optimism. As the positive trend continues, that increases the excitement, eventually euphoria, which usually signals the top. This is the number 2, 3, and 4 pattern from my 7-step framework. By the time that happens, the stock is up like 500 to 1,000%. Everybody is talking about it. It's on the news. That's when you know the top is very soon. If you go back, not just with stocks, but also with crypto. If you remember Dogecoin, the very top was when the Doge father, Elon Musk, was on Saturday Night Live. Buy the rumor, sell the news. That's a classic sign for the number 3 to turn into a number 4 crash. He told Insider he generally doesn't catch the stock when it first begins to trek upwards the first time around. Instead, he waits for the stock to consolidate sideways, close to its highs or within 25 to 35% of its peak before he buys in. The best trades I have are the ones I'm stalking for days. I could not agree more. He will gradually scale into a position he tested by slowly buying into a position as the stock continues to move upwards instead of slamming on a full position immediately. This way, if he's wrong about his pick, he won't take a full-size loss, allowing him to limit his risk. I personally don't scale. You probably shouldn't scale because, again, we're trading with smaller dollar amounts. I get this question all the time. On the upside, it allows him to continue to use moving his stop loss up so that he can lock in his profits. Aside from the charts, he will also skim through headlines to get clues why a ticker may be moving upwards. For example, on July 27th, BWV made a daily high. The catalyst was headlines surrounding monkeypox. That day, the stock hit a weekly high at 404. Kellogg told Insider that he was watching the price to see if it would hold its level for a few days before he decided to buy in. That was also alerted by Stocks That Trade Breaking News, which is something you should be using every day. He focuses on 3 main price points to determine a good buy-in. They include the stock's previous lows, its closing price, its opening price. He uses these prices as a guide for risk. If the stock's price drops under any of these prices, he assumes the trade will probably not work out. Very disciplined. He doesn't use many indicators except VWAP, which is a measurement of the average price of a security adjusted for its volume. This helps him see where the average buyer or seller is. I'm not a big fan of VWAP, but again, he's trading the most liquid, most volatile plays that all traders are trading. I'm using more under the radar stocks. So some people ask me, why don't I trade with a VWAP? Different stocks, different indicators. While Kellogg attributes his success to his ability to remain disciplined, he believes most traders fail because they don't control their emotions. I would add to that, not just controlling their emotions, but also being patient enough. So many people don't trade after they have a loss, even if they break the rules. For example, if you break my rules about cutting losses quickly, using leverage, going all in, trading non-big percent gainers, and you lose, it should encourage you that my rules are useful. But newbies don't see it that way. They just see dollars. Oh, I suck at trading, I lost. Doesn't matter if it confirms that my rules are good. So you need to understand that losses, again, are part of the game. Rule number one is cut losses quickly. And secondly, it's about patience. As Jack, Tim Bertani, and so many other millionaire students now show, you have the data. They don't do well or very well or profit at all in the first 9 to 12 months. How funny is that? My 2 8-figure students, neither of them made any money basically in year one. Think about that. But they were learning. It's very easy to make an emotional mistake. So on one hand, you have patterns that are repetitive, but they're not always black and white. Like every trade is a little bit unique. And if somebody makes a mistake on a pattern or trade, it kind of is just a downward spiral. Be very careful about that downward spiral. When you have one loss, you try to make it back. It doesn't even matter if you take a good trade or not. You just want that feeling of a loss to go away. And then you might take another bad trade and another bad trade. And then you're taking 10 bad trades and you're done. The outcome can often lead traders to revenge trade, entering the next trade without a clear headspace. He avoids these traps by detaching himself from his emotions. One way he does it is by only trading with cash he's open to losing. This allows him to look at the dollars on the screen as numbers rather than cash. If the trade turns against him, he accepts his loss. I wouldn't trade at all after a big loss. It's like after a big breakup, like your head is all messed up. Do you get into a new relationship right away? Like, oh, I just broke up with my boyfriend or girlfriend. Let me marry somebody. No, you take some time off and you have to clear your headspace. Trading is the same. He cuts out sooner rather than later. He then moves on to the next trade with a clear headspace. I agree. Sometimes the market will toss you around. You can't really avoid being in that situation. The real question is how you manage your trade when you find yourself in a position that's out of control. He's observed many traders having a hard time exiting because they don't want to realize their loss, so they stick it out hoping it'll change. Hope is not a strategy. We've seen this with weed stock lovers. We've seen this with gold bugs lovers. We've seen this with crypto lovers. When they're down 50, 60, 70, 80%, they just keep holding. It's so dumb. Even if you think crypto is the future, even if you are a lover of gold or biotech or anything, you take a 3, 4, 5, 7% loss, you can always buy back in. Welcome to trading. I know it's tough though when promoters and the whole crowd in this groupthink BS. This is why I don't like a lot of chat rooms. I like chat rooms, specifically the challenge, to like see which stocks are best because everyone's learning the same patterns and we kind of know which patterns are best. But there's a lot of groupthink chat rooms like with HKD where all the short sellers are like lemmings. Everyone shorts, everyone gets destroyed. So dumb. You cannot rely on the wisdom of chat rooms when we know that 90% of traders lose. If you go into any single chat room, there's a 90% chance that people are losing. Use chat rooms only to look at hot stocks. And then study the past so that you're better prepared than all these losers. Kellogg has found himself in trades that have ripped his face off, including one recently, HKD, where, he started shorting this at 200 because remember it was up from like 15. Stock kept rising up to 400 all the way up to 2,000. It actually went up to 2,500. He took a $400,000 loss. That's not good. He says, now this is a stock you can literally lose everything on and quite literally the most insane move I've ever seen. And again, all it takes is one big loss to take you out of the game. I've known a lot of short sellers over the years. Lately, the short sellers don't report their losses because they're scumbags. Be very careful with short sellers. I say short sellers are worse than penny stock promoters or crypto promoters. Penny stock promoters, they're just going to lie about their company and say everything is amazing when you'll probably lose everything. Crypto promoters will say everything's amazing, you'll probably lose everything, especially now that you're down 70, 80, 90% on most cryptos. Short selling, you can lose more than 100%. You can lose 200%, 500%, 1,000% of your money if you get squeezed, which is what we saw on HKD. While financial experts tend to recommend patient long-term investing for most young people to build wealth, Kellogg believes if you have a passion for day trading, then try it out, but definitely start small and understand the risks. Yeah, I mean, financial experts is a joke, first of all. The whole financial expertise world of gurus is a joke. Tell them to show all their trades and their performance. Most experts suck. So forget about what they say long-term BS. Invest in the S&P 500. That's the best index if you want long-term. 8 to 10% per year. Enjoy. You might be a millionaire a few decades from now. Or you might have a lost decade or two, especially after the rise lately. Good luck with that. Always, always be meticulous. I would never give my money for anybody else to trade. By the way, I'm never going to DM you. None of my top students are going to DM you. We don't manage anybody else's money. These are all scammers. This is an industry full of scams. I'm sorry to be the bad guy and tell you that. Don't shoot the messenger. I'm trying to help you. He says, in general, you're almost going to lose half the trades that you take. Even when Kellogg sticks to his plan and follows his rules, his win percentage is about 62%. So traders should expect to lose on a lot of trades. And if they haven't learned to control their emotions and limit their losses, the outcome could be bad. I agree. I win 77% of the time. But whether you win 62, 77, 50, if your gains are bigger than your losses, you will do well. The key is keeping your dollar gains bigger than your dollar losses. That's why it's all about discipline. Do not let any one loss destroy you or destroy your mindset or your confidence. It's a slippery slope when you have these big losses and you try to make it back with the wrong reasons. Furthermore, there's a lot of time and effort that goes into setting up a winning trade. For example, even though the market opens at 9:30, Kellogg will sometimes be up at 4 a.m. to monitor pre-market trading. While trading volume is often too low to make any trades, it helps them get a feel for the patterns. Understand, Jack Kellogg also wakes up that early for borrows on shorts. They didn't even get into the whole borrow issue with short selling. That's why he wakes up, not just for a feel for the markets. You can have a feel for the markets by studying the past and just studying normal, regular market hours. I don't like getting up even at 8 a.m. Eastern. That's just me. You don't have to get up at 4 a.m. I know there's people out there where they're like, traders have to be Olympians and athletes. No, they don't. Some of the best traders I know are the most screwed up, drug addicted, food addicted, traveling addicted, all the worst things, the most unhealthy things, and yet they're good traders. So don't think you have to get up at 4, 5, 6 in the morning and have to live like a freaking pilgrim. There's a lot of misconceptions out there. Overall, this article was very good. As it goes for trading articles, like there's a lot of fluff out there. At least it busted through some of the misconceptions. But you don't have to follow this to a T. This is just a guide, okay? Jack Kellogg, remember, learned from me, Tim Grittani, Roland, Mark Crook, everybody who was given challenge webinars. And now, him, Kyle Williams, Matt Monaco, these are some of the new challenge students who have made millions since my last conference. You have to remember, my last conference, they were all at like 50,000, 100,000, 120,000 total in career profits. Now they've all made millions. So it's what can you do to get there? So again, 3 links below this video. One, it's going to be a link to this whole interview, which you should read. You should memorize this. But understand, it's not just my first Millionaire student. It's not just our first press article. This was Roland and I from the New York Post. I should have brought this up earlier. Here's Tim Grittani and me. And guess what? There's more. There's more coming too. We actually have a few other Millionaire students, a few other reporters. Sometimes it takes a little while for the articles to come out. But overall, I am so proud of Jack, just 24. Hopefully you get inspired. Hopefully this helps you see the value of the challenge. Some people are like, oh, the challenge is too expensive. Jack has made 1,000 times his investment so far. Not to mention it's life-changing money. It'll probably make him tens, if not hundreds of thousands of times his investment over time. You cannot over-prepare enough. You cannot invest in your education enough. So I'll post a link to this article. I'll post a link to the challenge. You need to study up. And there was a third link too that I was going to put. Now I can't even think. I literally don't even remember. I've been going so long. This is a long day. I'll post a link to all of his trades too, I guess, so that you can see. But you really, really, really need to understand that this is a game of patience. The beginning is not so much fun. Some people message me, oh, I'm not having fun trading. Yeah, I'm not having fun studying. You get to have fun once you realize the benefits of all the hard work in the beginning, the losses, the frustration, the lessons, the studying. That's what leads to knowledge and expertise. Once you have enough knowledge and expertise, that flows over to your brokerage account. Even if you're trading small, you have better odds of success on every single trade. When you have better odds of success on every single trade, over time, you're going to do better than everybody else if you stay disciplined. You don't go all in. You don't use leverage. You don't get too cocky. You got to stay humble. Jack Kellogg was doing very well, just had his biggest loss. If you ever get too cocky, the market will humble you. The market will bring you back down to size and make you remember you're just a former valet. Oh, I was going to include a link from I don't even remember. I think I was going to include a video from his valet. Just makes me think. I legit am so disorganized, I can't even remember the 3 links that I said at the beginning of this video. I'll watch it. There will be 3 links. Whatever I said in the beginning, click them all. Study them all. So many people are like, what's the least I can study to succeed? How about what should you study to succeed over time? Not what's the least, not what's the most, what works for you. Studying lessons, studying DVDs, studying webinars. Challenge students, 70 Tim Grattani webinars. They're not going to watch themselves. Jack Kellogg, all these other guests have given webinars. Watch my webinars. This game is not that hard if you pay attention to those of us who have truly made it, those of us with a strategy, those of us with rules and lessons, rather than just following random picks and following anybody else. You should learn to be self-sufficient. Some people say, Tim, you have all these millionaire students. Why don't they tune into your webinars? Because they don't need me anymore. Like I said, my expertise is for people with $500 to $500,000, getting you on the right track to making millions over time. Not that everyone's going to be a millionaire. Like I said, most people give up too soon, especially in a changing market. I know 2022 is a little more depressing. Not necessarily the world. The world is opened up. You can see I'm tan. I'm loving life. But the stock market is a little choppier. It's a little more difficult this year. Welcome to trading. Some years are going to be better than others. It's not just what can you do this week, this month, this year. It's what can you do this week, this month, this year to be in the best position over time. You need to increase your knowledge. You need to increase your preparation so that you can be better prepared by 2025, 2026, 2027, 2028, 2029, 2030, 2031, 2032, 2033, 2034, 2035, 2036, 2037, 2038, 2039, 2040. How prepared will you be to capitalize in 2040? Most people think I'm sounding insane. What are you talking about? That's 18 years from now. It's an honest question. What are you going to do right now, this week, this month, this year, this decade to be better prepared in the future? That is the marathon, not a sprint mentality that you need to have. That is why I have a lifetime challenge. If you're in the challenge, you can join me and study for life. Email admin@timothysykes.com if you're interested. I'm going to keep teaching as long as I live. This is a mission. This is not just a job. You have the potential to achieve anything, but you need to get on the right framework. Oh, the 7-step framework. That was my third thing that I was going to link. You see, it comes around eventually. Some people think like I'm like faking this. I wouldn't be able to keep track of what I would, fake and what I wouldn't. The beauty of this is I just teach everything that's real, everything that I personally see, the 7-step framework, prepare the Sykes sliding scale. If you've seen my trader checklist guide, it's all real. It's just not an exact science. So everyone, again, leave a comment below. Congratulate Jack on his success. Read this article. Read about my 7-step framework. Join my challenge. If you're lazy, if you want to get rich overnight, if you just think that it's about hot picks, don't do any of the above. Get out of my whole feed. I never want to talk to you. Your toxicity, your negativity, your laziness, your narrow-mindedness is just going to piss me off, and we're not going to get along. I'm only interested in dedicated students. Jack Kellogg was dedicated. He succeeded. Who's next? Leave a comment below. Let me know.